Hello and welcome to TelecomTV. I'm Martyn Warwick. We're here in trendy Shoreditch in the City of London, and I'm at the Internet of Insurance event, and I'm talking with Andy Yeoman, the CEO and founder of Concirrus. Andy, welcome. We were talking a bit off camera, so we know where we're going to start this from. Let's start with this. The insurance industry is old, been around for a very long time. You know, Lloyd's List and all that, and it's got where it has today, which is enormous by being careful, by being conservative, and by being risk averse. However, times are changing, and with the Internet of Things now being the buzzword for everything on the planet over the past couple of years and getting seriously important, using new and old technologies, insurance companies, I think, are finding themselves between a rock and a hard place, really. They don't really want to change. They don't really want anything to disturb the even tenor of their way, but they know they have to do something, or ISP with internet service providers, with new companies bubbling under, with broadband, with 5G, they're going to find themselves in difficulties. Okay? They have to do something with the data they've got, which is a lot of it. What do they do, and how do they go about parlaying that into something useful?
Well, it's a good question. So I agree with your synopsis. You know, our view is that there will be two types of insurer in the next few years. There will be those that use the Internet of Things, and then there will be those that used to exist. And it's really as simple as that. So the Internet of Things does present a challenge. It presents a challenge because it's curiously one of those technologies that's actually made doing business harder. Because on one hand, they can't afford to ignore all this data, but interestingly, there's also no technology that's to date been available for processing it and making that decision in real time. So what the insurers need to do is my advice is actually start. So in 5 or so years' time, it will be evident what the answers should be. And we had a gentleman that spoke this morning that said, you know, our actuaries and underwriters want 7 years' worth of data. And if you get 7 years, by the time they've had 7 years' worth of data, they'll be able to draw two conclusions from them. The primary conclusion was we left it too late. So nobody really knows what the preeminent model will be, but what we do know is in order to find those we do need to start. We need to start by understanding that data and trying to analyse it.
Okay, thank you. Now, as far as data is concerned, what we're talking about at the moment, Internet of Things, you know, it's a broad church. There's all sorts of technologies out there, and some of them are quite old. Telematics is an old technology. It may well be faster than it used to be because of broadband availability and wireless and Wi-Fi, etc., but it's an old technology. But that seems to me to be in the main what the insurance companies will be using and relying on in the immediate future. Is that correct?
I'm not entirely sure I agree. So if we knit out the Internet of Things, our view is it provides, there's only two things that it does. It either tells you something that you previously didn't know, or it tells you something that was previously unknowable. And they're two very different things. So I think your summary was absolutely correct in the things that you didn't know. So the easiest thing is a meter reading. I could know a meter reading by sending somebody around there, but I can't send somebody around every half an hour. That would be uneconomic. So the Internet of Things will solve that challenge. And that's information that we're used to. Unknowables are different. So an unknowable that we've seen become known in the last few years is how somebody drives. But now, how somebody behaves generally, so how do they live in their home, how do they commute, where and when do they commute, what's their health like, etc. That's time series data, and it's behaviour that changes over time. They've previously been unknowable, and they've been unknowable because the source data wasn't there, but also the technologies and techniques to extract those unknowables into knowns, understand them and turn that into risk, etc., is something that's not been there. So we see that's the technology change that we see coming. How insurers have changed. It's certainly what we're aiming to provide.
I'm glad you qualified that, Andy, because I thought for a minute you're going to go all Donald Rumsfeld on me.
There are
unknowable.
No, I'm not going to go with this. He's got 4, I've only got 2.
Good. And it was very interesting. Now, what does Concirrus do to take that telematics information and provide it, or what do you do to it that allows an insurance company to be able to use it in a different way? You have the raw data. What services and products do you provide that helps the insurer to take that and make something from it in terms of either extra profit, reduce lower revenue costs, whatever it may be?
Well, so There's a couple of questions. I just want to unpack them. The first one is what do we do? The second one is what the insurer does with it. So what we do is really apply context to it. So the simplest example I can provide is telematics will tell me that someone's doing 48 miles an hour. What it won't tell me is the context that sits around that. So what we're able to do is take that telematics input and say, well, actually they're doing 48 miles an hour in a 50 miles an hour limit. That sounds good. Except the average speed on the time and day that they're doing it is 40 miles an hour. So they seem to be going faster than the average. And actually it's on a road that they're unfamiliar with. We've never seen them drive down this road, and it's at night, and it's raining. So what seemed to be 48 and a 50, which was easy telematics answer, when I provide it with the context, becomes a much more different. And that's what our software provides. It really pulls out that intelligence. Now, what the insurance company does with it is interesting. What we see as a big change in the insurance industry is a small change of letters. So we see insurance moving to be assurance. So let's change the example and go back to home insurance. If there's a leak and I can detect that there's an ingress of water in the home, what I'd like my insurer to do is not to wait until the ceiling falls in and then pay me to have it restored. I'd actually like them to jump in and say, actually call me up and say, do you know we detected water? It's my holiday home. We'll send somebody a key holder around there and we'll repair it. Because it's like a syndicated risk. The insurer's used to syndicating risk, but they've never done that with their customer. So with all of this knowledge comes sometimes an economic compulsion to act in the case of it, in case of the ceiling, but it might actually become a moral course of act. So we've seen a lot today about health insurance. If I can see that somebody has got high cholesterol readings, a high heart rate, they're not exercising, and we can see this line of behaviour, and I look and go, well, there's a 90% chance that they're going to have a heart attack. Am I morally obliged to interject? And what happens if I don't? So we see some of those changes actually moving insurers to be assurers, as these are the value-add services, and it's in fact the value-add services that we'll pay for rather than the insurance per se.
So basically what you're doing, which is exactly of course what the insurance companies, assurance companies want, which is a removal of risk, or a degree of removal of risk.
It's a management of the risk, absolutely. So I think one of the keynote speakers this morning said, insurance companies were used to, they took in premiums and they paid out claims. And I don't particularly want any communication between the two times. But actually what people are looking for is, well, how can you help me? So telematics companies are helping improve the driving behaviour of young drivers, and by doing so avoiding claims. Well, can we apply that same philosophy to health? Can we apply it to home? And actually, can those two cross? So someone that looks after their health, can we assume that they look after their home and drive safely, or are those things not true, and how's that going to work? And that's before we get into the commercial lines. So understand how buildings are used, understand how transport's used, etc.
It's a fascinating area, and we could talk about it for quite a while, but I haven't got too long to do it. But I'm going to ask you one last question, which strikes me as being important in this, considering what we've just been going through. What about regulation and data privacy in all this? Because there are ramifications here, obviously, on the amount of data, big data, and the manipulation of that big data, and then the individual, a lot has been sold on big data has been, the value of big data and its safety has been sold on anonymisation. Of course, in an insurance case, it's highly unlikely to be there wouldn't be any point in it being anonymous. It has to be a particular building, a particular person, a particular vehicle, whatever it may be.
Specificity designed in.
Indeed so. So what are the ramifications for the industry in terms of that, in terms of data privacy and anonymity and security of data?
Well, so the anonymity and security of data is, I think, something that people are reasonably familiar with. Data protection per se is a reasonably defined set of regulations, but perhaps the one that's coming down the pipe that we haven't seen discussed a lot today is actually data portability. So as the insurers gather more and more data about me, the regulators are saying, well, actually, even if you provide me with a better deal, if you're the only one that has information about me, then you're anti-competitive. So this regulation about portability, it's law. The countdown's begun. There's less than 2 years to comply with it, and at that time, people will be able to take their data with them and use it in other things. And I think that's going to fundamentally change the market. It certainly requires different software and solutions to operate it. Something we're we're very familiar with, but it requires a different model where people can move their data around, which means that not only does it need to be taken, but it also needs to be received and needs to be able to use. And I think that's a massive change for the industry, one that's perhaps going to stretch the capabilities of the vendors in the space and actually the insurers as well.
Very interesting stuff. Andy Yeoman, thank you very much indeed.
Thank you very much.